Hey, welcome back to Two Super Guys Trade Stocks. I am Dylan.
And I'm Vinny.
And holy crap, was today absolutely insane. It was like a free fall for finance stocks. We're going to talk about multiple banks, not just one, multiple banks that have a problem, and also how this could be a capitulation event that's finally happening for me.
Two Stupid Guys Trade Stocks.
Oh boy. Yep. Yeah. So let me move my face here. Look at this giant red bar here. All right.
Yeah.
Look at the volume. We closed below the 200 with solid volume, guys. I just want to point out one thing for the people who watched the video last week. I had said, hey, this line's important, these two. Look at that beautiful just touch right off that line. That's technical analysis to a T right there.
Just the tip, buddy. Just the tip.
So most people know by now, why did this happen? I don't think I've ever seen something like this happen before to like a kind of like a, not like a huge bank, but a large bank. I mean,
yeah,
they fund tons of Silicon Valley ventures. They closed the other day at about 280, and here's the 5-minute chart. They are still tanking. Okay, they opened at about 160, went all the way down to 105, and just still hemorrhaging. Okay.
Yeah. This has shades of 2008 kind of going on there. I don't know. There's a lot more to be kind of ferreted out in terms of due diligence, but that's the last time I remember seeing a company evaporate in terms of that portion of market value that quickly. That's pretty insane.
It's true. And you may be like, dude, this is a small bank. Who cares? Here's Charles Schwab. 75 yesterday, 67 today, low 64. There's a reason for this. There's also a reason for this insane volume bar here, which I'm going to talk about. Let's go.
That is a massively disproportionate volume bar. That's insane.
Yes. Same with Bank of America. Absolutely wild. Wells Fargo. The reason why Charlie Munger's in the presentation a bit is because of this fun BABA thing here. But before we go into some details, we're going to look at kind of a hilarious article here.
Yeah. So, this is just an article talking about this Silicon Valley Investment Bank and kind of portraying the scene a little bit as, this company basically liquidates everything they own in terms of assets. And, is now they're talking about taking a massive write down this quarter and having to raise funds. And that's why the stock is just getting utterly obliterated. And they have to jump on there in the middle of the day and have like a whoa, calm down conference call, right? But this quote right here, it's like the end of Animal House. Don't panic, now I'm panicking. Watching you broadcast. This reminds me of kind of, what do you call it? Margin Call, that movie. That's a great movie, by the way. I don't know if you've seen it. Or they
good.
talk
It is
about,
a good movie. It's like fictional, but not super fictional. I mean, fictional, but possible.
Yeah, exactly. That's what this looks like from the outside to me. I don't know, but I'm just a stupid guy on the internet. So what the hell?
It's definitely not good. Obviously, Michael Burry's on this thumbnail. Charlie Munger's a big part of this too. We're gonna talk about that. I do think that this could be a capitulation event. This is huge. The actual thing that happened, why the CEO had to go on and then have a client say that Animal House comment, which is wild if you've read that book. Basically, they're embarking on a 1.75 billion share sale. They're doing another 500 million common stock public offering to General Atlantic, and they closed all of their positions. 21 billion of securities for an almost $2 billion loss. Mm-hmm. Why?
Yeah. Fire sale, baby. Fire sale. That was what Margin Call was all about.
Here's why. This is iffy. Oh, yeah. Okay. So venture capital deployment has exceeded their expectations. Basically, their cash burn has remained elevated and increased further in February, resulting in lower deposits than forecasted. Now, remember, this bank is banking partner for nearly half of all U.S. venture-backed tech and healthcare companies in Silicon Valley. Okay? So all these startups get their cash from this bank partnering with other banks. This bank, as of between yesterday to now, is 75% off.
Great sale.
75%.
Don't tell your wife, man. You have to keep her away.
I think,
Jesus
like,
Christ.
I don't know, Wells Fargo or Goldman Sachs, someone buys this, right?
Yeah, probably. I mean, the question is, do they buy them for like $3 a share, like Bear Stearns got bought out?
I mean, tomorrow's going to be wild too, right? Now, this wasn't the only thing that happened. Silvergate Capital, I didn't even show the chart. It's just dead. I mean, it's not completely dead, but it's just another tank fest, and it's basically, it's not as big of a deal. They're also in cryptocurrencies, so I didn't really put a lot of weight on it. But Charles Schwab had that giant dip because some hedge fund, large institutional investors sold 8.5 million shares. They do not put up a lot of volume every day. That's a hell of a lot of shares. That was a big block trade, and that is people leaving.
Disgusting. And that's a household name. That's who I trade with. Jesus Christ.
Yeah.
They
They lost about 10% today.
Oh, wow. That's great. Really warms my heart.
I know, right? Not great. The reason why I put Munger in here, all right? If you look at his three holdings, Bank of America, Wells Fargo, and BABA, making up 42, 39, and about 15%, he did not have a good day today.
No, not at all. That'd be pretty miserable too. I imagine U.S. Bank didn't do any better either.
Yeah, I mean,
So,
it's
literally
it's pretty bad. Yeah. So you got to think, these banks, they're in trouble. They have these giant interest rates, and so many people are locked into like a 2.5%, 3.5% mortgage. It's gonna be a problem. And then you have these smaller banks, not the big ones, these smaller banks that are dying. It's not good. It was only two banks today. That sounds weird to say it. It was only two today. I mean, it's kind of a big deal.
Yeah, that is pretty intense. I don't even know how to feel about this, to be honest. Like, the interesting thing for me is that this is so concentrated in early startup tech, and you're going to dissuade people from having an appetite for risk there, that this is going to really have impacts like multiple years down the road is kind of what my initial like thought process with this.
Yeah. Unless Goldman Sachs opens, I don't know, a whole company with just buying them at $10 a share. That could definitely happen. We closed below the 200 on volume, fellas. So this does not seem like a great thing for the market, especially with if we get a 0.5 rate hike, which is more and more possible with more and more data coming out. I'm feeling 370 in the next like 2 weeks.
2 weeks.
I know it's wild. Wait, when's the rate hike? No, the rate hike's not until the 22nd.
March 22nd.
Okay.
Yeah.
A week after, 3 weeks.
Ooh, okay.
I know. That's a bold call. That's a bold call.
That is. The market is so bipolar right now. It's not even funny. This story hasn't changed. It's the perception of the story that has changed. Recently, we have been saying this crap for what, a year at this point, and it's just that people are finally starting to buy into it. I guess, at least on the short-term horizon.
When I see large institutional investors getting out of banks is when I'm definitely feeling more confident in my shorts. Obviously, I'm leaving this thing up. So if anyone watches the 3 weeks around, it doesn't, you can call me an idiot. That's fair. I made the call. I'll stand by it. That's my bad.
We named the channel appropriately.
Boom. Give us a like and subscribe, guys. We'd really appreciate it. Have a great day.